Welcome, everyone. I'm Angelo Robles to the Angelo Robles Podcast. I'm also the founder and CEO at Family Office Association. We're a global membership organization dedicated to families of wealth. I have very fortunate to have great discussions with amazing people practically every day, including today. To give a little context to our discussions, I help global families and their family offices solve problems, procure positive future outcomes, and prepare for intergenerational necessity. It's vital for families and their family offices to understand their vulnerabilities and become more resilient so they can thrive in crisis and prevail during challenging times. Today's discussion is titled Global Macro, the State of the World, and How Paul Rogers in Singapore is investing. I think from that title, you know who our special guest is. That would be Paul Rogers. And with little fanfare, Paul, welcome to the show.
Great to be on. Thank you.
Well, it's really a pleasure, and thank you for your time. We're doing this relatively late morning Eastern time, which means that where Paul is in Singapore, it's technically very early morning the next day. We appreciate his time. Paul, I'm going to start with, you're from the UK, you're living in Singapore. Why did you make that decision to look more globally in your perspective? Apparently, not just your investing, but where you wanted to live.
The short answer, I'm actually Irish, but I was brought up in the UK, went to university there. During high school, I had this vision that I would be in Japan first, Korea, and then China focused. And my life kind of went that way. So basically after university, I've been in Asia most of the time. I set up venture businesses and then went into investment banking. I ran structured finance for Asia, for non-Japan Asia for UBS, which at the time was, I think, the predominant European investment bank. And then for Lehman Brothers in the good old days, left to run a hedge fund and now run my family office here in Singapore, in addition to having an asset manager called Kaba. So that's a quick thumbnail. I've lived in Japan, Korea, Hong Kong, and Singapore these last 10 years.
Well, excellent. That's quite a global background and very impressive in terms of your investment acumen and your experiences as well. So especially in Asia, you have quite the level of experience with living in different countries that are unique in terms of their culture and from a variety of perspectives. Would you say in all the topsy-turviness of the world, more than just COVID, although certainly that's accelerating things, that it's important for families that are business owning families that are successful, however you define that, to potentially consider residency, dual citizenship more globally than what many of them are used to, and why that was important for you?
Definitely. This is such a huge topic that there's many ways of approaching it. But I would start by saying that surviving comes before thriving. And the U.S. particularly has been had I suppose a tradition of being very much focused on itself because it's a big market, big offering. You can live in Alaska, you can live in Hawaii, and plenty of places in between. And that's reflected in many Americans not even having a passport. I forget what the number is, but I think it was only something like 20% compared to say 80 or 90% for Europeans. That also is reflected in the worldview, where the prevailing American export of identity politics, which is literally destroying the West as we speak, is completely irrelevant in Asia. It's just not a part of the Asian mindset. And what we're seeing is a kind of segue and prelude into essentially a totalitarian left form of government that could see massive asset confiscation, that could see incredible curbs on we're already seeing it on social freedoms, on free speech, on freedom of association, and so on and so forth. And again, this is not being seen in Asia. If we look at COVID, the West has dramatically had a worse experience than Asia. Already in China, where we have some of our biggest investments, it's as if COVID hardly exists anymore. I mean, people are going about their business, the economy is recovering. Singapore, they have a very efficient social monitoring system of checking in and out, but basically business is operating as normal. But we look at Europe and we have a huge COVID resurgence hitting particularly in Spain, Italy, and so forth, UK, shutdowns, which are having a massive effect on the economy. US is going through another resurgence itself. So we see a significant decoupling.
You had past experience, and you mentioned it in Hong Kong, and obviously the dynamics with China, things are changing there. You made a decision to be more active in Singapore, and it's amazing in 50 years what Singapore has accomplished. I don't know if we've ever seen anything like this before. What do you like most about Singapore?
Well, Singapore, every region tends to have a safe haven, a safe banking haven. It's traditionally been Switzerland in Europe. You could argue it's been Uruguay in South America. America has been its own safe haven up to now to a certain extent. But for Asia, there was a tie-up for some period between Hong Kong and Singapore, but now it's clearly Singapore. And there's a desire generally there's a sort of consensus and desire that safe havens are useful for everybody. And I think that augurs very well for Singapore, in many ways taking the mantle of Switzerland, not just for Asia, but for the world.
I would agree with that. And my audience knows I've been relatively in the past bullish on Switzerland and still find it to be an intriguing country. Many of my families know my interest in bank ownership, but I think I might have found, which we'll get to a little bit later, for part of your reason for doing that, a much simpler alternative. But for some people, Switzerland has provided a safe haven for many of the global families over many, many years. And you believe, and I want to hear your opinion, that I guess beginning during what we know here in the US with piercing some of the privacy back in 2007-8, that although it still may be an intriguing country for some, especially Europeans that want to stay there, it's not what it used to be. And why is that to you?
Well, I think there's several reasons for that. I mean, I personally like Switzerland. I have a certain amount of exposure there, but they made a colossal mistake by caving into the US on UBS. And essentially the price of that is that the integrity and the whole logic of, let's say, certain kinds of confidentiality and sort of the ability that the Swiss legal system would stand up against other legal systems, particularly the US one, was completely shattered. I think that was the first mistake. The second issue is whether or not in the second round of in the economic recession that is coming, whether or not Switzerland will be able to pull off its magic trick of being this untroubled haven in the continent. And I'm not so sure about that.
I mean, when I think of global jurisdictions, some of them are cities that are just amazing. And perhaps challenged to some degree, and some of them are more countries. From an investing perspective, I think of New York, I think of London, I think of Zurich, I think of Singapore. Those are, there's others for sure, maybe Dubai for certain business interest in the Middle East. What do you think, and how has that changed? And will COVID, which has gravely impacted talent and resources in companies, specifically in London and New York, is this changed forever? Is it ever going to go back?
Well, the thing is, you have to look at all the trends, behind that. I mean, it might be worth doing a segue into what's happening recently in the markets. If we look very briefly in terms of short-term issues, and then how they relate to the largest issues, and then what's the likely outcome of that. We're seeing oil crashing recently, which is a huge illustrator of a drop in world demand. There's a massive short of bonds in the market. There's this big expectation of a reflation due to a blue wave. The market is priced in the idea that the Democrats will get in. But how is that likely to play out? The reality is that the stock market has been just surviving along fumes on the expectation of a new fiscal stimulus, which hasn't been able to pass because of the difficulty of getting anything past the House and the Senate. And however, whatever happens, whether Trump gets in or the Democrats get in, nothing will get passed until January or February. And so we have this very uncertain period. In my opinion, and the smartest traders that I know share the view that that yields will crap out, that these shorts will be washed out of the market. And this leads into a number of larger issues. What are the weapons that the Fed or indeed any central bank are left with at the moment? There are no monetary options on the table whatsoever. We're into ZERP. The UK has just announced they're going to look at negative interest rates, which is incredible. The US, the view is that this will happen in the US, which will of course break out all of the shorts. We could easily see the 5 and 10 year bonds go negative into the first quarter of next year. So what is left? We only have fiscal tools to play with, stimulus, obviously punitive taxes, and so on and so forth. But against that backdrop, the velocity of money is slowing to a complete halt. And this is something that I don't think is looked at sufficiently. If we go back, say, to 1997, we had something like 2.2, which means that every dollar was driving $2.20 of GDP nominal growth in the market. Where are we now? It dropped to about 135 just before the pandemic. It's now well below, going towards 1. So and that's reflected because people are not spending. People are staying at home. They're not taking it. They're not driving the economy. Real estate obviously is totally impacted, and so we have this unprecedented combination of the lowest rates in world history. We have economic activity slowing right the way down, and the bond market is a better predictor of what's going on in the economy than the stock market, which is always affected by animal spirits. And then we have to say, well, how will all of this play out? And I think that's really the kind of questions that people who run significant money for their family have to ask.
Yeah, boy, you bring up a lot of things there. Your last comment that relatively the bond markets and bond traders usually have a little bit of a look ahead compared to others. We had on Adam Robinson, who's a well-known thought leader and macro thinker, that felt the same way, but felt even ahead of bonds was commodities and commodity traders, and looking at things like copper and gold. From your perspective, being a global investor and being a macro gent at heart, what do you think of that, the interplay of commodities and understanding where the markets are headed?
Well, it depends which commodities. Gold is completely separate, should be seen very separate. So we see, for example, gold and silver to a lesser degree is trading very differently to oil. Oil is now dropping, which is showing that that essentially world demand is contracting. On the other hand, we're seeing a huge amount of buying of gold by the central banks, and gold is actually a smile trade. It's going to do very well in either a deflationary or a reflationary, inflationary environment. We've seen, for example, we're looking at gold for the first time. Warren Buffett, who's always been incredibly hostile to gold, he's always trashed it. He's just come big time into the market. And his main, I think he didn't exactly put all his reasoning out into the market, but obviously that's had a huge effect. We're seeing endowments coming into taking larger gold positions and so on and so forth. So commodities are can't be seen as a single category.
And in terms of, you mentioned the stock market. So here in the US, we had a very early crash relative to COVID. And we all know it should be a lot lower, but it's not. We could certainly argue it's been heavily supported by Apple, Amazon, Google, Microsoft, some of the core quote unquote tech stocks. It's very, very top heavy. It does look like it's going to be gravely challenged for the reasons that you noted, but I'd like to hear you expand upon that. For those that are more active as stock pickers, for the last 10 years, hedge funds long short have been crushed net of taxes and fees. It's been a beta, a passive game that appears to be totally flipped now. It could be a stock picker's market.
Well, I'm very negative on the stock market. Essentially, you've got to think of two or three major factors. One is that the US stock market is massively propped up by stock buybacks. And we had trillions of dollars. All of this is completely dried out and gone. So there is no more capacity to do that in the market. That's the first thing you have to look at. The second is that this last recent bounce. I mean, you've had absurd rises in tech companies that are completely unsustained, and essentially, what's keeping the market up is this expectation of a further stimulus, and that stimulus, and it's running on fumes because it was expected, and there was an expectation of a stimulus in September that was stymied politically. Nothing is going to happen, and really until I would say February at the earliest. Whatever happens in the political calculus, maybe a little earlier if Trump gets in, but maybe not. So in that environment, it's very difficult to see how we're not at the end of a secular bull market in stocks.
Governments, of course, have the ultimate power. They're central banks, and they can print money. So again, short term, because they're concerned about their political legacy, as well as simply getting reelected, they're not looking 10, 20, or 30 years out. And that's always been the case, unfortunately, with politicians. And part of it's due to how the system is structured. That being said, you have that, again, the market being propped up. When you're talking to, when you know many of the world's greatest hedge funds and macro traders, you did hint at it a couple of minutes ago, but what are some of the general themes that you're seeing they're doing to mitigate risk?
Start with central banks and we'll go to the funds. Central banks, what do they hold? Depending on the countries, for example, some countries like Japan and Switzerland, they hold both equities and bonds as well as gold. US, obviously the bond and gold holdings, but in general, governments hold gold. So they're incentivized. And we know from sources in the market that all central banks are all asking the question, how can they add to their holdings without affecting the price too much? They're all coming into the market. So buy gold miners, that's what we're seeing, including Bitcoin and so forth. I mean, basically, bonds are not going to, we're going to see yields crap out because the ZERP is going, they have no choice. There are no monetary instruments left. There's no way that interest rates can be allowed to go up. And so you have this incredible anomalies in the market. Just recently with Lagarde and the IMF, they're talking about this new Bretton Woods agreement, sort of Bretton Woods style agreement in which the idea is to get all central banks to somewhat analogous to 2008 to reflate simultaneously, because if they all do it, then who do you short? I mean, so this is the kind of environment that we're in.
And in terms of investing in gold, and it may be different for an ultra high net worth family comparative to a hedge fund manager that may look for futures and more liquid instruments, where families may want to literally own gold. But what are you seeing from that perspective in your view? And would it be different for a professional investor or institution comparative to a family of wealth?
Well, yes and no. I mean, to me, there are common things. I would say it depends on the size of your holdings and the ability to open up accounts and so on and so forth. But the first thing I would say is completely, you need to debone bank risk. I mean, if you look what's happening to the regional bank sector in the US and banks in general, I mean, European banks are on their knees now, particularly Spain and others. We're going to see runs on banks. The banking sector is not going to survive in its current form. And that is a view that is held among some of the smartest investors and thinkers that we share ideas with. And you have to think, where will that go? Ultimately, we will see central banks are all now looking at issuing their own cryptocurrency. And that's quite a chilling thought, because that really disintermediates the bank. If we see countries issuing stable coins, then they can both tax at source, and they can also provide entitlements, whether it's called universal basic income or whatever title is given to it, right directly at source, completely disintermediating the banks. And the view is that we're going to see a lot of collapse of banks, which already, think about this: the real estate sector alone is big enough to take out the banks. We have an estimate from some of our research that's showing that something like 26-27% of US corporations are zombie companies, as defined by, if they're not fed a lifeline of debt, they would go bankrupt. that alone would take out the banks, half the banking sector. So there's likely to be consolidation, and then you have to say to yourself, well, where is this going ultimately? And I mean, even Mark Carney, in his famous March speech alluded to that. We know the Bank of England's looking at that, and a lot of other smaller countries are. The Fed is as well. It will happen. We will see already in China, paper money is almost unusable. You can hardly buy an ice cream with paper money now in China. And that's one short step away from them issuing their own cryptocurrency. So this is the kind of direction that we're going into.
No doubt about it. So we had on a prominent attorney from Baker McKinsey in Zurich, Martin Michaels, a couple of weeks ago. And I believe at that time when he looked, there were 33 banks for sale. There's a perception that it's Switzerland, that it must be really rare. And I asked them, why so many? And the answer is because they're built on antiquated models. They're inefficient, they're ineffective, they're too costly, and they're just not as needed in today's world. That being said, I still made, I think, and he did too, a little bit of a case for why, for wealth preservation and other benefits, there may be some advantages, but I admit those advantages appear to be getting weaker and weaker all the time. You just went into a subject I was going to bring up. So if you have governments now eventually switching to digital money, probably sooner rather than later, that could take care of the intermediaries, like you said, the banks, make them less needed. And that's the whole advantage of blockchain and cryptocurrency to begin with. If that happens, though, Paul, the governments could still, well, not print because it's not paper money, but they could make more digital. Is it an advantage of Bitcoin? Is that it's going to be limited to 21 million and it's not controlled by the governments at all?
Absolutely. I mean, whichever way you're going, we're seeing money printing and essentially the debasement of the currency, whichever way they go. That's the same. So the fixed supply of Bitcoin makes it a unique alternative investment. And not only that, we're now seeing, for example, PayPal just made a facility open for trading Bitcoin for the general public. We're seeing major pension funds going into it. We're into a new phase. This Bitcoin is going to go stratospherically high.
Yeah, there's a public company on NASDAQ. I might get it wrong. I believe it's MicroStrategy. It's a tech company. It's run by a gentleman or the CEO, Michael Saylor, who I'm trying to get on. He made big news for, as opposed to parking money in cash and very low yield treasuries, to putting over a couple of months, 450 million in Bitcoin. And at first I said, is he crazy? Now, he might be. There's other hedging I would do if I was him, but I think he makes very good points. And by the way, he looks at it as a 100-year strategy for the company.
Yeah, I mean, I don't know about 100 years, but I think he'll do very well out of that trade. I mean, you need to have incredible courage to do that. I don't think
yeah, yes.
But
and his board.
I would say that you should certainly consider putting 20% into Bitcoin.
Well, actually, on that note, and that's a stark statement. This is going to be very generic, but it helps the audience to understand. If I take $1 billion liquid family, let's even say they're US centric, and they're looking to become more global. So in the past, some of the things that I spoke about for the reasons that you're talking about, to hedge risk, to believe in the moat around the castle and wealth preservation, is they should own global income producing businesses, and this is easier said than done, that are preferably recession proof. Do they look at farmland? Do they look at other resources? We see more and more families of wealth buying non-public companies, getting more diversified. What do you think of that trend, even though it's very illiquid?
I do. Well, I mean, I think that's good too. My view is that gold and Bitcoin will replace in large measure part of the function that, bonds have had in the classic 60-40 allocation type of model. And they should do. I mean, bonds are just a cash proxy. And my view is that that people should be very wary about holding anything other than a certain amount of government bonds. Corporate, the best corporate bonds will be fine in the short term, but certainly not bank bonds. And if you look what happened, look at central banks. In the assets that they hold, there's no way for any of them to go up. We have rates at the lows in the historical lows, the stock market has completely discounted any and all potential value on fumes. Where is the value there? And so basically, we're looking at. I mean, gold is now being looked at by all central governments and is being reallocated in portfolios and hedge fund monies across the globe. So my view is that you want to have a dynamic allocation of Bitcoin, gold, and a certain amount of government bonds. And then in addition to that, I like food and medicine security trades. And that should be global. That gives you your global piece.
I agree with that last comment as well. So back a little bit to,
sorry.
So gold and Bitcoin, you're saying potentially, and again, everyone's situation is different depending on liquidity and portability, all that good stuff, that maybe as much as 20% in some combo of gold and Bitcoin. That's a lot.
Oh, easily. I would go higher. I would go to, I would go, let's say conservatively then 15 Bitcoin, and I would go as high as 20, 25 gold.
Now, I would assume for gold, are you recommending more ETFs and futures or more physical ownership of gold?
Absolutely not. You have to think that there will be complete systemic crashes coming through. I mean, algo trading, the risks of derivatives and algo trading mean that you do not want to be in ETFs. You want segregated accounts that, to the extent possible, are bankruptcy remote.
What would you say, and I agree with you, what would you say, though, to the fact that Bitcoin is far more volatile than gold so far? That appears to be maybe getting a little closer. On the other hand, though, physical gold, you can't just put it in your, well, you could, but not too many, put it in your pockets. And imagine going to an airport with pounds of gold, you are going to have a problem. I guess the amazing thing about Bitcoin is, in theory, and not that it's always recommended because it has risk like kidnapping, torture, but you could have the keys and the seed phrase in your head. You could go anywhere in the world and access your money. It's much more portable and liquid than gold.
Correct. Although there are digital options for holding gold through essentially a crypto format, even today, for example, with the Perth Mint and other solutions. So there are ways of having, let's say, digital access to gold in jurisdictions other than the United States. But I agree. I think that and the other big bugbear is the Chinese holdings. The Chinese government, or China, has made there's a lot of holdings of Bitcoin in China, and they're actually supporting it as an asset class, as they are gold. What some people don't realize is the Chinese have been importing something like 2,000 tons of gold, I think, per year. So there's that's another huge prop for the market right now.
We mentioned income producing businesses globally, especially along the lines of agriculture and healthcare, like you noted. How active would you, for that sample family I gave, that $1 billion liquid family in the US? The US has been dominant in deep tech, early stage investing in VC. It's not quite as dominant as it used to be relative to China, to even Israel and others. But would you suggest a little bit of a small allocation, whether it's 5 or 10%, towards going for broke?
Yeah, sure. I mean, again, and there'll always be outperformers out there. But as a value investing, and I mean, even in general, the VC market and the stock market, it's not going to do well. I mean, if you pick some great plays, they will always be great. But that's not where the market is right now.
I mean, most people, like you said, and this doesn't apply as much to the kind of families we're talking about, but the average person was always told 60-40, 60-40, 60-40. What would you say for a family? Again, if they got $1 billion, they're already rich. They want the moat around the castle. But you're saying very, very little into the public markets. Would you make an exception for being concentrated in Apple and others like Microsoft? And even then, maybe only 5 or 10%, or not at all?
Well, I would. I mean, they're all shorts to me.
Wow.
I mean, I mean, you can keep it. I mean, keep some by all means, but I mean, I don't see any value there. We're going to see the stock market absolutely fall out. There's no way that there's nothing that's going to sustain it in this next period.
I mean, the other asset class, and it's very, very geographic specific, including with tax laws, so I'll try not to get too deep on it, is going to be real estate. Uh, in real estate, there's some tremendous tax advantages here in America. You have the opportunity for passive losses depending on the ownership structure. You have LLC ownership to protect you from certain risk. You can maybe not pledge your personal assets. You get 1031 exchanges, which are amazing tax benefits. But again, it's being hit hard by COVID. It's beyond illiquid. So what would you say to a family that is still looking long-term out in terms of global real estate interest?
Well, look, this is the hardest of all. It's the most political of all in many ways. I mean, I think it depends what's going on with the land. I mean, rental properties have been given, I think, forced moratoriums. Who knows how that would go under a Democratic administration? Clearly, there's an awful lot of risk, for example, in low-income housing or multi-tenancies, these kind of units. Anything food producing, I think, would be good. But I think that you need incredible risk appetite to ride out the shakeout of the debt market and the shakeout of the fact that income is broken. I mean, the effect of COVID essentially has been to slow the velocity of money and essentially prevent the replacement of income. That's why it's so reflationary. The whole moves that central banks have to make going into fiscal 21.
I mean, you're so connected among, and you were one yourself, a hedge fund manager. And when I'm often asked by people who are among my most favorite people to talk to about the economy, about politics, about investing, it's almost always hedge fund managers. They're usually very smart. I'm very interested in their line of thinking. Now, long short managers were often wrong the last couple of years, aren't we all? But would you still recommend, I mean, families can't always be direct investors. Would you still recommend that they consider certain managers and certain strategies to get exposure that could do it better than they could? Even if it is 2 and 20, who cares? It's really going to be my net.
I mean, sure. I mean, there will always be good managers, but I mean, again, you need to look at their thesis and whether or not they understand these kind of issues. I mean, I would say that getting exposure out of America is also critical. Asia is coming out of this crisis, and as I said in my opening remarks, the West is not only destroying itself with identity politics, but it's making itself irrelevant because Asia is not importing this kind of social insanity. And so, how this plays out in the backdrop of the politicization of COVID is very, very uncertain. I mean, there is a high probability that the West collectively goes towards a very toxic form of totalitarian left politics and with wealth confiscation and essentially very anti-business type of policies. And if that happens, then we'll start to see the West looking more like what Eastern Europe used to look compared to Western Europe. When we look at the backdrop of where Asia is going. We're also seeing a complete decoupling of the supply chain, which to some extent was inevitable, and it's not just a Trump phenomenon, but China has essentially is creating its own Belt and Road system, and the way that the US is going and the way that Europe is essentially tagging on to the US is we're going to get these two parallel systems, and that's going to also have a reflationary or inflationary ultimately effect. But I mean, all of these stresses mean that diversification, I think, is also a key theme for your clients, should be.
A quick comment on my own question, then setting the stage for our political discussion, which we're going to segue into. And even with the hedge fund managers, depending on their strategy, you got to look at their counterparty risk and their risk mitigation strategies and how active, if they're long short managers, they are on banks and leverage. And that would, from what you're describing, be very concerning. So part of that, again, it requires really a professional investor to do a deep dive and really understand those issues. My audience knows I've spoken about government confiscation probably so much they're probably getting tired of it over the last couple of months. Practically every government does it. That's called taxes. Governments have the ultimate power. They could raise your taxes. And unfortunately, depending on certain situations, either state or federal here in the US, there's forfeiture laws. I've had families that say they've gotten the knock on the door. They've gotten their passports pulled by the federal government, and they've had challenges they had to fight in court year after year. Americans have a tendency to think this doesn't happen here. It happens in Venezuela. But it could happen here. I would hope it's going to be doubtful. And I think we have many, many benefits benefiting us here as Americans. But my job in what I do, like I said, they have the castle. It's the moat around the castle. It's wealth preservation. If you could talk a little bit, you mentioned a couple of words like identity politics that some people in my audience may not be familiar with. We obviously have our election tomorrow. So we're November 2nd here in the US as we're recording this live. And some may hear it weeks or even years later. I don't know. But tell us a little bit about your opinion about the negative direction that we're heading to in this country, in the US.
Well, I think basically what I see is that democracy is already in severe in dissolution in the West, not just America. I mean, America's essentially exported this brand of toxic identity politics, which was spawned in the cesspool of American academia, of intersectionality and super rights for different groups, which has the effect of doing what? Destroying the rights of the individual. Anyone who doesn't pander to that agenda is, for example, professors have their rice bowl broken. They're kicked out of tenure. They become unemployable. Students are kicked out. Employers are fired. Businesses are boycotted. People are doxxed. So there's a kind of de facto social credit system that's spawned in the US, together with a de jure system in the form of these hate crime laws, which came under Obama, which really have no other purpose than to create complete division and resentment and hatred within groups. And you can't have that. There is either one standard for all or no standard at all. Now, if you go across to Asia, this simply is there are situations like, for example, in Indonesia or Malaysia, where you have favorable policies to the indigenous Malay people or Indonesian local people. But there's a kind of very clear understanding between how the Chinese and Malays work it, and it's sort of it's delineated very well. Whereas in the US, it's a complete chaos process, and it's been exported to Europe, and now it's exported to Australia and New Zealand. And this toxic environment is a segue into hardcore socialism, and so which is going to kill business, and that's the difficulty. If that process, if there's no relief or end to this kind of politics of hatred and resentment, then it's very difficult to see how it doesn't spiral out of control.
No, certainly good points. Again, as I noted, we're literally one day before the US elections. I was going to say, we know how it's going to turn out by late tomorrow night, but that's likely not going to be the case. There'll likely be contested on either side. It may take weeks or perhaps even longer to figure out. If you go by the polls, it looks like the Democrats are going to be in good position. But there's a variety of reasons why the polls are not necessarily always accurate. For a variety of reasons, many people that are on the fence, that are maybe leaning towards voting to Trump, just don't like to admit it or show a sign on their lawn. There's a variety of factors for that. You're an outsider to US politics looking in, but you do have, I believe, a son going to school here, and you're obviously interested in a global perspective. How do you think it's going to play out tomorrow?
I mean, the market expectation is for a blue wave. Now, that could be a surprise. Nobody knows. I think whichever way it goes, it's likely to be contested. But I think that even if Trump gets in, if you look what's happening, media now is effectively controlled by big tech in the US, particularly millennials. They predominantly get their media sources from social media, and social media is essentially controlled by Silicon Valley. All of big tech has decided that the trend towards totalitarian left is unstoppable, and they've decided to double down on it. It's a very interesting calculus. Why would they do that? I mean, why would, for example, tech barons who are like modern versions of 19th century moguls with their security details, mansions and private jets and so forth. Why would they be voting for people who stand for the abolition of private property, the abolition of the family, hardcore Marxism, and so on and so forth? It doesn't really make sense at first glance, except for the fact that I think they've made the calculus that there's nothing that can be done to stop it. Therefore, they might as well bankroll it and then try and survive. Even if they have to throw their own little people under the bus, they'll survive in the long run. And I think that's the calculus that's being made.
Paul, I mean, do you think there's interference in U.S. elections from probably China and Russia, but do we sometimes do the same thing in other countries?
What a joke. I mean, if there probably is, because all countries interfere with each other to a certain extent, but that is like an accounting error. Basically mainstream media are like unregistered super PACs in America. They all vote one way. They're all basically super PACs for the Democratic Party. So I mean, the interference is all look to it locally. Don't forget internationally.
And we do encourage our live audience listening in to please ask questions via the chat feature. It's always good when you're interactive, whether it's politics, the economy, gold, Bitcoin, investing. As you could tell, Paul is very opinionated, very versed, and very global in his perspective. So I think he may be able to impart his advice that would give knowledge to you, to me, and to our audience that will hear this. So I got maybe one or two more questions left, but we certainly encourage our audience interaction as well. I'm going back to something that you said earlier relative to effectively that banks are to a large degree a middleman, an intermediary. And although some may poo-poo Bitcoin, and I think they would be wrong, you can't deny the impact of blockchain and its a distributed ledger and the opportunity for even again, US government and other governments creating their own cryptocurrency using a platform which they would have to in cryptocurrency like blockchain, which appears to be amazing. And that opportunity to, again, get rid of, quote unquote, the middleman, which also is job issues, but we won't dive too deeply into that. Do you think this is all coming to a head, that much of this that might have took 10 years, maybe COVID and other factors, are going to push it to now, a year or 2 years from now?
Well, I think what you have to see is that I don't see how banks survive in their current form with the level of losses that they're going to have to contend with. We saw them bailed out in the 2008 stimulus package.
Yes.
But I don't think that can happen in the same way going forward for a whole host of different reasons, not least because there are other alternatives. I think that my understanding from speaking with central banks and people in the market is that we will see governments go towards cryptocurrencies, and there'll be incredible consolidation in the banking industry. I don't see them surviving in their current form.
And I would agree with you. There are people that are saying with the US, with China, with Russia, with all that's going on, that we're on the cusp of potentially war or world war. I'm a little bit more hesitant about that. We each have tremendous nuclear power. But as we learned during COVID, you could have tremendous destruction of a country kind of internally through its economy. You don't need to have nuclear weapons. Do you think we're obviously in a very dangerous era in the world right now? Do you think it's maybe that one straw away from being a complete unmitigated disaster?
I'm not that negative. I don't see I mean, obviously it's possible. Regional conflicts. I don't see a major war as being likely. I don't see any of that in the cards anywhere. I see a decoupling, and I think the main one is going to be that Asia really decouples out. I mean, China essentially is muscling the US out of Asia, and I'm not sure that the US is going to do much about it. But whichever way. They're recovering very, very fast from the whole COVID pandemic situation, and the West is going in the wrong direction. So I think that getting back to your audience, getting exposure into Asia and have some kind of diversification of assets into Asia is a very wise policy.
I mean, let me take a little bit of a counter argument just because I want to hear your opinion. We had a guest on that was not recorded. He refused it. His name was John Feresi back in the early summer. And basically it was meant to be a little tongue in cheek, but only a little. It was why America doesn't suck. And some of his points were, it's a great country, contract law, sustainable independence in energy, great farmland, our age population relative to the size of our country compared to other developed countries, Italy, even China, Japan was actually good. The fact that we needed to be more open actually on young people coming in with immigration, we needed to even build up our VC more. And as opposed to relying on manufacturing in China, it's actually cheaper to align better with India and Mexico, as well as bring some manufacturing back here, as well as our natural resources, et cetera. He did sound like he made some very good arguments. Are there some areas that you could agree that we could still turn this thing around?
I agree. All of that. I like all of that. The demographics of the U.S. are relatively good compared to, as you said, compared to some countries. So all of that, in a sense, I would agree with. But it's moot if you have this kind of social disintegration and basically a war between the races and between different identity politics groups. And so the question is, can the U.S. get past this incredibly immature and insane period of its history and segue into a culture of one nation? This is the huge question in my view. We
are getting a question from one of our participants who's a very astute investor. His question is, what are you looking towards as a sign that an imminent collapse, and I'm not sure you think that, but his words, an imminent collapse is around the corner?
Well, one has to say a collapse of what? I mean, for sure, we will see a collapse of the stock market. I think the bond market is a better indicator, and the commodities market is showing us where demand is collapsing and so on and so forth. But as the stock market collapses out, and we see more and more money printing, then the question is, how is this going to be allocated? What kind of stimuluses are we going to get? What kind of social policies are we going to see? And how is that going to play out in terms of, let's say, the world economy and where Asia is going? I mean, it's a question of how the decoupling effect is going to play out as well.
I mean, I'm going to put the economist hat on you for a second, which is probably an insult. So pardon me, Paul, but we'll give it a shot. We have a tremendous deficit here in this country. We still are in the midst of COVID. It looks like there's no end immediately in sight. At best, maybe, I don't know, second quarter of next year. And even that's going to be very much a variable. We have political unrest. The deficit's getting bigger and bigger. Taxes are likely going to go up. So I went from painting a little bit of a positive picture 5 minutes ago to getting very negative now. What's a way that we could get out of this? Or I'm assuming there's no shortcut. This is going to take time.
Well, it is going to take time. And the question is, when are we going to see the economy, let's say, unshackled by COVID? I mean, I think the response to COVID has been also incredibly politicized. And unnecessary. I mean, Asia has taken a far more rational response to controlling it and minimizing the damage to the economy compared to Western countries. You got to think this: if you print money to replace income, then that is directly reflationary. If you print money to replace broken credit in the system, which is what happened in 2008. Then it doesn't affect high street prices so much because you're essentially, but you're propping up asset prices, which has to some extent a negative effect on the Gini coefficient because it makes, for example, houses expensive. Millennials can't get onto the same, let's say, cycle of wealth creation that their parents could, and that's part of the resentment in the whole process. However, all financial instruments that are a call on future income, and if you print money to replace income, which is what's happening, and you allow SMEs to be destroyed, which is also what's happening. We have a whole, there are small and medium enterprises that are being destroyed, which will never be repaired again, all across the West right now in this process. So then, who benefits out of that? Of course, Amazon or these kind of big tech, they benefit enormously. If you keep people at home, you restrict them and restrict their social capacity to interact and create value, then you're talking about a kind of dystopian social control, and that is I never thought we would see that in the West. And I think this is, to me, the greater risk. And when will that come off? Many people I know are of the view that if the Democrats get in, the Republicans will not get in for 2 or 3 generations. It'll be a one-party state in the US. I mean, these are the kind of concerns that people offshore are looking at.
Many people do feel that way. There's people that feel possibly Trump gets just enough electoral votes and the Republicans win this time. But if you look at the demographics of the millennials and Generation Z, how big they are, how often much more, I'll be kind and say Democratic, you would probably say progressive leftist they are, that it's just difficult to imagine that the Republicans, I think would be better off if there was more parties than 2, but that appears to be unrealistic. If you just look at the demographics, now will some of the people change from leftist to center, from center to a little bit more conservative? Yes, some. I think it's going to be relatively a modest percentage. Possibly the Republican Party needs to shift on some social and other issues to be more appealing to a younger audience. I'm assuming you may disagree with that, Paul, but I
agree with that, but will that happen? I mean, I don't see any evidence of that, and that's a pity. I mean, sadly, thanks to the perversity of American academia, millennials have been utterly brainwashed and now think that communism is a great idea. Fascism is bad, but communism is fantastic when they're both pretty much the same thing at the end of the day. They're totalitarian and they destroy the rights of the individual and the freedoms and welfare and ability for people to raise themselves up. So this is the question: is the West signing up for a generation or 2 of totalitarianism? That's the real question.
Yes, I suppose that is. We shall find out. I did get a text. It was pretty much going to be my next question for you. Yes, you're a private investor, effectively your own family office, and this has been incredibly insightful, but you obviously have some very strong opinions. You're well connected. For those families that would like to work with you in some aspect and learn more about becoming more of a global citizen, more of a global investor, how do you work with other wealthy families?
This is we have an asset manager that up to now I've been focusing mostly on our family office for various reasons. We just opened up an asset manager with the ex-CEO of Standard Chartered. And so we have a capacity. We don't have at this point, we haven't set it up for American clients, but it's something that we're working on right now. But certainly in terms of providing advice and strategies, it's something that we will be looking to do in the first quarter of next year.
And maybe if we have a couple of minutes left, I am getting also some questions that are coming in, and my audience knows that I'm very active on looking at things globally, potentially becoming a global citizen, et cetera. So they want to know about your decision a little bit more than what we went over half an hour or so ago about Singapore. I look at Singapore as being an area of interesting banking situations, but you just noted that likely is, for a variety of reasons, blockchain and other things, going to be less and less important. And again, the questions are flying in. Are you concerned that China may just simply take over Singapore? What are some of the advantages you think you're getting in Singapore, but what are maybe 1 or 2 things that concern you a little bit?
Okay. So first of all, let's break those down. There are several questions there. First of all, the last one first. China taking over Singapore. The chance of that is 0 for various reasons. One, Singapore has a fantastic relationship with China, and it suits China very well. I mean, China, it's also geographically very, very far away. I mean, it's in Southeast Asia. It's not like Taiwan and Hong Kong, which China considers part of its territory. So there's no danger of that. There's also a bigger story because you have a huge Chinese diaspora in Southeast Asia that largely owns the business and the finance and so on and so forth of the region. And so that's a very strategic, important play for China too. I think that, to my first point, Singapore is a superb place for asset protection. It's a superb territory because it cherry picks the best of English common law. of British systems with sort of Chinese entrepreneurial and global best practice, including US, let's say tech and so on and so forth. So I think it's a fantastic hybrid. I think there's no place like it in the world that can replicate what it has at this point in time.
So you think for a wealthy family, a global citizen, for a variety of reasons, it has surpassed, say, Switzerland?
And without a shadow of a doubt. And I think that but I mean, I think one doesn't have to have one place. I mean, if you're a substantial family, you might want to have some allocation in Switzerland, you have some allocation in Singapore. I think that in terms of political risk, while you still have money that you can allocate out, of course, legally, you have to go through all of the AML requirements that are standard, KYC and so forth. But taking a block of money and putting it into an intelligent structure that is pristine makes an awful lot of sense because it gives you optionality. If you want to break residency in the future, you have the possibility of a second life. I mean, I don't think you want all assets in one territory. That's certainly my opinion.
No, and I believe for someone looking to become a citizen of Singapore, you cannot have dual citizenship. I guess residency, yes, but if you want to be a citizen and get approved as such, you need to make that your sole citizenship. Am I accurate?
That's accurate, but I think that's something that one doesn't need to, that shouldn't be a priority because getting a citizenship is very hard. I mean, that's a very big decision. I don't think that's necessary. You can get residency, and that's probably what one would want. But also there are other strategies. For example, someone asked about Vietnam. Well, fine. I mean, somebody could, for example, might take the view that they would like to live for a while in a country like the Philippines or Vietnam or another Asian country, but they would have their banking and their assets and asset protection structure in Singapore. So you can bifurcate. I mean,
excellent.
One could be living elsewhere, but I mean, having a piece. I'm just saying that I think that as a pristine whitelist, very rigorous territory with a very effective court system and very high standard of governance, I think Singapore is unparalleled and very low tax.
Yeah, we all like that one. And Paul, for those that are interested in what you say and want to follow you in the future, whether it's social media, a website, a blog, how could they learn more about you?
Good question. I think that what I'll do is subsequently Cable Partners, our website. There's a way of contacting us through there. And otherwise through you, Angelo, if any inquiries come in, we can field that. That's certainly possible.
Excellent. I'm going to give maybe a little bit more of a longer close than I normally do. It's been great to have Paul on. I think he's been a very thought-provoking and interesting guest. And again, first and foremost, he's a family office. He's an active global investor and allocator. And those are always like probably the best guests to have on. He doesn't really, especially for American citizens, really have much to offer you from any other perspective. On my note, I'm Angelo Robles. I'm the host of the Angelo Robles Podcast and founder and CEO at Family Office Association. I'm going to dive a little bit deeper into that for our newer global audience with us today and the fact that we have Paul on, who's very global in his perspective. More so than ever since COVID, it's been a great opportunity for me to do a tremendous amount of global research, to have more time to be more of even an original thought leader. And it's been a hyperactive and busy time for me. Many of you know I'm very focused on wealth preservation, families of great wealth. Like I said, it's the moat around the castle. And it's I don't know if it's ever been as dangerous in many ways as it is now. So some of the things that we spoke about with Paul, being a global citizen, looking at different hedges, mitigating your risk, being diverse, being active from deep tech to farmland to possibly real estate, but having liquidity, looking at gold. And for sure, I've been a little slow to come around, but I am a much bigger advocate and believer. I don't quite know about 20%, but I think the opportunity for Bitcoin and crypto is something that many families should look at. There's no one perfect answer, especially for an American family, because they have the IRS that follows them all the way around the world. So for mitigating taxes, wealth transfer, and wealth preservation broadly, and I've spoken to the best attorneys in the world on this who I know, there is no one perfect strategy, whether it's buying a bank, an international entity, private placement, life insurance, Bitcoin, diversity, income producing businesses, they're all part of it. It's dozens and dozens pieces of different things. It's a complex ecosystem, and how it intertwines together is highly complex. We do encourage you. You don't have to do this alone. Join an organization like Family Office Association, have access to my Rolodex, my research, our thought leadership, and that's the benefit that our members get at a higher level, starting from scratch or reinventing a family office. I personally do consultative services on that. I take on only a limited number of assignments every year. So on that note, you can reach out to me to social media. I'm Family Office. Go and subscribe on YouTube. You could easily find me on LinkedIn. We're Family Office Association on Instagram. Our website, which has been updated going back about 2 months ago, is familyofficeassociation.com.